Hello, this is Cynthia Fick, and this is the October 3rd stock market update. Well, already October has started with a bang. We have interest rates surging higher. The 10-year Treasury is up near 4.7%. That's the highest it's been since 2007. And the stock market so far has had a couple shaky days also. But October is historically a month of stock market bottom. So won't be surprised if we don't see that sometime happening in the next little bit also. Just remember too, that they just started up the student loan payments back again. So those are happening. And also there's a big tax deferred debt coming from the West Coast. They gave them to October 15th to pay their taxes. So there's a lot of money coming out of the banks to pay all these loan payments and deferred tax payments. So a lot of that is happening, and it could have something to do with this rise in interest rates. Just remember though, from the very beginning, at least the last couple of months, I've been saying that this, we were kind of due for a normal, healthy correction. I wouldn't be surprised if it happened, and guess what? It is. So far from the high that we've had over the last couple of months, we are down 7.5 to 8% on the S&P 500. And again, normal, healthy correction, 2 steps forward, half step back. Nothing about this has changed my long-term view that we are still in that secular bull market. Think of these positives. We still have a strong economy. The Fed is fighting inflation, and they seem to be closer to the end of that than the beginning, of course. And once the markets really pick up on that, historically, they will react favorably to that. Think about this also. 7 stocks led most of the run in the market. Think of the 90% of the stocks in the S&P 500. They're just kind of like barely above water. And so once the market does kick back into the rally mode, there's an awful lot of ground being made up by those 90% of the S&P 500 that is just majorly underperformed. So for all those reasons, we think, again, we're going to find that bottom sometime here. Let me show you really quick. I'll share the screen and show you what I am talking about. Basically, again, this is a chart of the S&P 500, and this is as of September 29th, 2023. You can see the market. This is the 8% or so that I was talking about. Again, normal, 2 step forward, half step back. This is 2022. This pattern looks very different than what we have going on in 2023. So from October of 2022, that's, basically a year ago, we went pretty far, pretty quickly. And, again, it's natural, normal to do a correction. So here we are trading down into some of these moving averages, and won't be surprised if we find support somewhere in here. And that, again, could be happening sometime in October. So that's what we're looking at. And we will stay tuned and talk to you next Tuesday. Have a great week. Bye.